What's up guys, welcome back to the channel. This is going to be a very quick one. In today's video, I'm going to show you how to take advantage of some of the trading setups you ignore on the price chart. Most times we are told that price moves in a wave, that is, price moves like this, where price forms a high, low and continues to the upside, and in the downtrend price moves this way. This is not totally correct, because if price moves exactly like this, everyone would be profitable in the financial markets. So this is how price usually moves. Most times you usually see price accumulates. After price accumulates, we might see a manipulation and we see price distributing, and it continues that way. Another accumulation, maybe price accumulates a little, we see a manipulation and a distribution. So this accumulation you see here, this is a sign of weakness. Okay, so let me explain this with the chart we have here on the screen so you understand better. From what you can actually see here, this is price forming a high, which signifies that we are in a bullish trend. Price is pushing to the upside, right? So after here we see price forms series of high. This is a high, a pullback, a continuation and a pullback, another high being formed and a pullback before we see price forming another higher high. So when you see something like this, what you should note is that this is sign of weakness. This area right here, price is finding it hard to continue with the uptrend. I hope you can clearly see that. If you look right here, what we see is we have a massive push to the upside that formed this high. We see a pullback. You see how price moves massively again, forming this other high, and we have this pullback. So at this point, price doesn't have strength to continue pushing in that direction with the same momentum, and at this point you see price slowing down. This is what we call sign of weakness. Okay, price slowing down at this point. So when you see this particular price action right here and you see price takes this high with momentum, and after that, what else do we see? Price comes back to take these lows right here. Okay, this low, this is where we have the change of direction, or either choose this area right here as your change of character. So it's okay to come here and label here your market structure shift. Now at this point, what you should note is that this is an accumulation phase. This was the point price started showing you the sign of weakness, telling you that it could switch from this uptrend. I hope you can clearly see that at this point price was very weak. It couldn't continue with the uptrend. It was slowing down, and after now what do we see? Price takes this high. So this is an accumulation. You can mark this area as a liquidity sweep. We see this shift in market structure, and when we see shift in market structure, it helps us confirm that price might actually switch the trend. Okay, so if you see this kind of opportunity, there are two ways you can actually take this kind of trade. Firstly, after you see price accumulates and now you have this manipulation. So when price manipulates, taking the liquidity at this particular high, what you can actually do is you can go down to your lower time frame to look for an entry. Okay, I'm not going to talk about entry because I've numerous videos where I talked about entry, and I say this video is going to be a quick one, so I'm trying to make it very short. So you guys look for entry when you drop to your lower time frame at this point. So this is the first way you can actually get involved, and once you get your entry, you can target any of the lows right here. Okay, and the second way you can actually get an entry is when price shifts and breaks structure to the downside. What you can actually do is you can map out your point of interest from this area, be it your order block or your supply and demand zone. Okay, once you mark it, you have to wait for price to come back and mitigate it. Okay, so what you have to do is you have to wait for price to come back, mitigate this point of interest, and you look to trade to the downside. And if you look, price builds enough liquidity on its way coming back to mitigate the zone, and this is another accumulation area where you see price moves massively to the downside. You see how price pushed the downside while it was coming back to mitigate this zone. We see another sign of weakness, telling you that buyers are not really in this market. You see how price was moving, we didn't see any significant move. You see price slowing down at this area, now mitigates the zone and it pushed to the downside. If you wanted to take another entry, this is a break of structure to the downside, right? Price equally sweeps liquidity over here, which is actually a good one, things we love to see. And after that, what else can we actually see? Price push with momentum breaking this structure to the downside. Now what you can also do is you can look for a second entry right here in continuation of the downtrend, because price has actually switched its trend. And if you look over here, we equally have an inducement area which is going to increase the probability of this playing out. So this always happens on the price chart. You might not always see it, but one thing I want you to take note is that when you see this kind of setup, try to take advantage of this setup. let me show you an example on the price chart. But before that, if you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. Over here, I teach about smart money concepts. So if you want to be part of that, consider subscribing to the channel. So let's see the live example now. And here is the example. This is Euro NZD price charts, the 4 hours time frame. So from what you can actually see here, you see price has been pushing to the upside. You see the momentum, price was moving to the upside. At this point, price pushed to the upside. We have the sign of weakness, which I explained. You see this area, price slowed down a little, but it didn't form any change of character. You see that there was no shift in market structure, but after it slowed down a little, you see buyers continue to take control of the markets, push to the upside, and over here we've seen this sign of weakness. Price starts to slow down, it couldn't continue moving to the upside. So it's okay to mark here as an accumulation area. Okay, accumulation area must not actually be equal highs and equal lows. Okay, this particular area can be marked as an accumulation area. So at this point, the thing I love about this is that after price accumulates, we have this manipulation phase. Now price distributes to the downside, which gives us a market structure shift, and this is exactly what we want to see on the price charts. So we have this change of character, and you can actually go ahead, mark here a liquidity sweep, because at this point, after price accumulates, we have this sweep of liquidity before this shift in market structure. So here is the liquidity sweep, and this is the kind of setup I want to see on the price charts. This alone is a very good one. The setup has presented itself on the price charts. So your duty right now is to take advantage of this particular trading opportunity. So what you should do right now is you have to mark out your point of interest. Where are you going to trade from if you want to take this particular trade? So there are different ways you can map out your points of interest, your supply and demand zone, different ways, your order blocks. Even if you want to trade from the Quasimodo pattern, that is your QML pattern, if you want to trade it, it's left for you. So what you're going to do is you select your point of interest, the area which you'll be looking to trade from, mark out your point of interest, and then wait for price to come back and mitigate your zone. A simple setup. Over here, we still have an efficiency that needs to be filled, another confluence. So playing price forward, what can we actually see? And you see price starts to accumulate again as it's returning back to this particular point of interest. So you can actually go ahead and mark this as another accumulation area, because price is just moving calm at this particular point. Price accumulates, manipulates, and it distributes. Okay, so and you see what happens over there. Price takes this high, that is another manipulation before it mitigates this particular zone. Now we see the reaction to the downside. So this is how you can actually take advantage of this particular setup, and you see price continues to push to the downside. I hope you can see that. So if you wanted to take another trade, just like I explained, this area could still be another area you could look to trade from, marking your order block. Then price comes back, mitigates, and it pushes to the downside. I hope you can clearly see that. And you see from this particular point, price change direction, the direction of price changed, and you see price pushing to the downside. This is a very simple setup, a very simple trading style. And if you can learn to take advantage of these setups, I tell you, you're going to be profitable. A lot of people always ignore this kind of setup. They just want to see a very clean setup, just like the way it's being taught. That is the textbook example. Okay, so learn to take advantage of this kind of setup, and you're going to see a lot of things changing in your trading style. Okay, note that price accumulates. After price accumulates, we're going to see a manipulation and a distribution. Have that in mind, and a lot is going to change in your trading style. Okay, so that's it, and I hope you got value from this, and thanks very much. I hope you got value. Thanks very much for watching. See you in the next one.